Chapter 2. Savings. When the subject of saving is discussed, the most frequent response is, "I don't have the capacity to save." Well, if that happens, it's because the starting point has been wrong, and your expenses exhaust or exceed your income. If you are among those who would give the above answer, try going back and thinking about when this anomaly began to occur. I'm using the word anomaly so as not to qualify this situation with other less friendly terms, such as dramatic error or fatal decision. The point is that, for the economy of a low or middle-class person or family, lack of savings is the worst of all possible situations. It means being doomed for life to depend on a job that may not be stable enough, and many sleepless nights thinking about payments for the next few months. The absence of savings capacity is the main problem to be combated. You have to save every month, without any exception. To achieve this goal, you will have to use all possible strategies. If you are a young person who is starting his adult life, here are the basic premises. 1. Avoid financial debt as much as possible. 2. Do not fall into the temptation of pretending that you can own certain assets that are not necessary. 3. Ask yourself every now and then the big question, can I live for 5 years on my savings? If you already own a mortgage for many years, check your expenses from time to time and, if necessary, start a period of war economy. Do you need 2 vehicles when one of them is parked more than 3 days a week? Do you need pay TV channels when you have dozens of free channels? Will a $1,000 household appliance work the same as a $500 one? Can you do without that monthly expense in leisure, in cafes, bars, and restaurants? In the field of insurance, there is usually a lot of competition between companies. Take advantage of it and call 1 month before your home or car insurance expires to ask for an improvement or a price reduction. Austerity does not have to be an unpleasant situation. Getting goods or services at reduced prices can also be a great source of satisfaction. Many wealthy people brag to others that they've found bargains, so there's a way. As for children, education in austerity can be very beneficial for their future life. Learning from childhood the true value of things and the effort involved in obtaining the money to buy them will help them think in economic terms and live more rationally. Children of austere parents often reproach them that others have more things than they do, making them understand that appearances are just smoke, and that, despite having many material goods, these people may not be able to maintain their properties if they run out of income is not an easy task, but it can be reinforced when, having achieved our savings goal, the family can afford a trip to Disney or a weekend in a hotel, for example. The work has been well done. The family has been able to save, and here is the reward. During the last major crises of the 21st century, the one that began with the collapse of Lehman Brothers on September 15, 2008, and dragged the world economy into a new Great Depression, and the one caused by the COVID-19 pandemic in March 2020, the family economies that had the worst time of it were the highly indebted ones. In Spain in particular, thousands of families discovered that if they couldn't pay their mortgage to their bank, it wasn't enough to just hand over the house or the mortgaged property, but that in addition, they continued to owe the financial institution the remaining amount of the mortgage. This ignorance of the small print, devised by obscure minds and law firms, led to numerous evictions with the consequent dramas that sometimes led to suicide. In 2008, there were 27,251 evictions in Spain, although, paradoxically, this was not the highest figure of the crisis. But the curve continued to rise until reaching the chilling figure of 70,257 evictions in 2012, 4 years after the beginning of the crisis. These figures show us that thousands of families were living happily on the edge of the abyss, attracted by low interest rates, and in the end, after years of hardship trying to pay the mortgage, giving up other expenses, they could not continue to do so and the bank foreclosed on their homes. And let us remember that after an eviction, the debt does not end, but continues to be owed what was left. A family economy is totally devastated after one of these dramas. Seeing this, one of the clearest things we must have in life, and that we must teach our children, is stay away from banks. The bank is your enemy. Another case of bank abuse and fraud was the placement of thousands of shares of preferred stock by bank managers to conservative savers, which then became a financial trap. We will talk about this in the investment section. But no, this warning has not been enough. Let's remember it again. Stay away from banks. The bank is your enemy. Even if your relationship with the banks doesn't end in a financial trap or an eviction, you'll never get away with it. The role of the bank is to get you into debt. It is a perfectly legal business, it is true, and for large corporations and business networks, an irreplaceable source of financing, but not for families. Over the centuries since the appearance of the bank in 2000 BC in Mesopotamia, lending grain to farmers and merchants, financial institutions have been coding their business with a patina of familiarity and closeness to families. Plans for the future, youth card. We celebrate the lifestyle of the elderly. Their marketing departments strive to make us believe that, by signing mortgage and consumer loans, we will be happier and enjoy a full life. Until one fateful day, a judicial officer, accompanied by several police officers, knocks on your door. If there are protests from any Stop Evictions Association, they will come with the riot police to make you leave your house. Now it's the banks. And the director, or the manager of the branch, who explained to you in such a friendly way the advantages of signing the mortgage, no longer works there. They're being moved from branch to branch so that desperate customers don't do anything crazy. So we agree. We will use the bank to keep our savings. We will not allow them to be stolen from us. Preventing banks from keeping our savings in the form of infinite interest does not mean that we cannot work with them. We actually need them, if only to use their safe and not to have the money at home or their investment platforms in stocks or funds. Depending on our ability to save, we can work with a maximum of 2 financial institutions, but we have to be extremely careful with them. The idea is to avoid their management fees as much as possible. Deposits and bank accounts are guaranteed up to a maximum of $100,000 by the state. If your savings exceed that amount, it would be wise to work with 2 banks, although part of that savings should already have been dedicated to investment, as will be explained later. Normally, the account in which the salaries are domiciled does not charge commissions. We will also try to have the payments of household supplies debited to this account to save a good deal of money each year. Attention, very important. Financial entities are closing offices at a fast pace in the last few years and concentrating their business in the net. The mobile applications offer attractive designs that have been studied in depth by experts in order to attract us to the acquisition of their products. It is not uncommon that on the home screen of the bank's web or application, even before entering with your username and password, you will see immediate loan ads for amounts that seem harmless, such as $5,000, $10,000, or $20,000, which you can contract with just one click. Well, this simple click that will make the money appear in your account as if by magic will require a supreme effort when you want to amortize the debt, with interests that can reach 12%, because they are consumer loans and amortization commissions of 4 or 5%. In short, a ruin for a family economy in which its members earn an average of $1,000 per month. Are we clear? We will use the bank to guard our savings. We will not allow the bank to steal from us. The only way for a person or a family with the income listed above to prosper in life is to avoid getting into debt with the banks. Their specialists have had thousands of years to perfect their methods since Mesopotamia, and they have done it very well. Their products are designed so that all your surplus savings will go to their property, and it is clear that we want the effort of our work to be ours, not that of the richest people in the country. A practical example. 1. The acquisition of a home. We will develop this section in the real estate section, because this is, by far, the expenditure that can most condition the family economy. The purchase of a house of $300,000 with a mortgage of 25 years means that, adding the interest, the family will end up paying $450,000 for that house. If instead of a house of that cost, the family acquires a house of $200,000 and pays off the loan quickly, they will end up paying an extra cost of between $20,000 and $30,000. If, by having less debts, you increase your savings, and you can have a liquidity fund of $100,000, this can be used to invest in another house or in financial assets that can yield between $20,000 and $40,000 in those 25 years. So, instead of expenses, benefits. 2. The purchase of a vehicle. I strongly recommend that you never purchase vehicles on credit. Car consumer credits are always conditioned to our desire to appear, and are the most burdensome in the market, reaching up to 12% interest in some cases. In addition, they are disguised as comfortable monthly installments, with amounts that are not very high, but with which you will end up paying a car and a half. In addition, having to change the vehicle normally every 10 years, the financial cost of the installment purchase can be up to 4 times higher during your life. You will have enjoyed 4 cars at $15,000 each, but with the interest, it is as if you had bought 6. The other 2 have been used by the finance company and the dealer owner at your expense. So, never buy cars on installments, always in cash. There is a lot of supply of second-hand vehicles if you can't afford to pay for a new one in cash. If you join your mortgage to that of a consumer credit for the purchase of a car, the catastrophe is assured. You will never be able to get out of this vicious circle. Let's go to another very important section for your financial stability: credit cards. This time, I'm going to stress this much more than before. Never use a credit card to postpone purchases. I've used a whole page for this advice because it's worth it. Credit cards are the scythe that death will use to end your stability and your project of a comfortable and peaceful life. Ideally, you should not use credit cards of any kind, but unless you can go to the ATM to withdraw money once a week, it is absolutely necessary, unfortunately, to have one. The card you use should always be a debit card. There are many types of cards. We should survey the market from time to time to find out which ones charge less management fees and offer more advantages. Lately, there are cards linked to large stores that do not charge management fees and offer a discount whose amount can be used for purchases with savings vouchers in the same store. If you are a regular customer of that department store, this is a very interesting option, as are cards that return a fee for purchases in certain stores or service stations. Anything we can get a profit from is interesting, although all card issuers will try to reverse the situation in your favor. In the case of large stores, they will try by all means to delay your purchases to charge you, as we said before, usury interests disguised as good intentions. Always use debit cards, just for the convenience of not having to go to the ATM and carry cash, or to get discounts in the form of coupons if you can, for no more than that. You direct the situation, don't let them do it. We have already controlled the dangers that most concern us as economic entities, and therefore, desirable objectives for any marketing department of a financial institution. We have learned to move around the edge of the system without falling into its abyss, about to rise to the top. We control our expenses and optimize them. We avoid at all costs squandering our savings on absurd interest, and we have managed to save. But whether you are young and starting your life or already independent and perhaps sharing an apartment or just moving into a rental one, you still have several economic decisions ahead of you that can have a great impact on your future. The purchase of a home, and later, the investment of the savings you will be accumulating thanks to your great intelligence and common sense. The human being is an economic entity. We all are, and there is nothing we can do to avoid it. Sometimes it can be lazy to think about money matters, but just as we do with health, studies, children, or vacations, financial issues, however small, are as transcendental in your life as the choice of the career you are going to study or the person with whom you are going to form a family or a couple. It's worth learning the basics of economics. You have to do it so that you are never expelled from the system, because within the shelter of the system you live very well. That's what it's for.